When I started the National Debt Project in 2019, I thought it would take me 1 to 2 years to figure out, but it ended up taking 4 years and thousands of hours. And the video you're watching is going to review that journey in 17 minutes. The first video released was Balancing the Budget by Eliminating Tax Loopholes, where I reviewed the Joint Committee on Taxation's Tax Expenditure Report. That report quantifies how much tax revenue the government isn't collecting because of legal tax deductions and credits built into our tax code. If too many politicians pass too many tax loopholes, the federal government won't have enough revenue to cover its spending, so it would have to use debt under our current rules. So if national debt is indeed a problem, it makes sense to cap the total amount of special deductions and credits built into the tax code to keep politicians from overpromising and spending revenue they don't have because they chose not to collect it. The next video released was supposed to be Trust Fund Optimization, where I'd review the impact of increasing the rate of return on government trust funds, like that of Social Security. But to optimize something, you first have to know how it works. So I released my self-IOUs to explain our current investment strategy of buying special issued treasury bonds and intergovernmental transfers, which unfortunately is the same logic behind a Ponzi scheme in that the assets purchased aren't real, the system uses new investors to pay old ones, and the population of investors has to be growing or contributing more to keep the system stable. But after showing how government trust funds and my self-IOUs work, I released Trust Fund Optimization, where I went back to the last major overhaul of Social Security in 1983 and reviewed what would have happened if we had invested in real assets. And it's a shame that we didn't do that, because doing so would have reduced national debt by trillions of dollars and allowed us to decrease payroll taxes levied against American workers, which is an important factor to consider in an ever-increasingly globalized economy. Unfortunately, COVID hits the US in 2020, so in June I released Where Does Stimulus Money Come From to show the impact the stimulus acts and additional government spending would have on future national debt projections. Basically, our trust funds would be depleted sooner, and we'd reach the 100% debt to GDP ratio faster, which increases the expected cost of debt to future generations over the next 75 years. The next video released in September of 2020 was the Compounding Military Pension, a failure in military strategic readiness, which was different than all the other videos so far because of the sheer volume of work required to reach its conclusion. First, I had to compare the lifetime cash flows relative to deployment use of individual service members in the active duty, guard, and reserve in this paper titled A Tale of Two Eugenes. Then I had to develop a program to calculate the cost of our entire military's force structure consisting of millions of service members, where every cost variable was adjustable because this subject is so political. And then I had to write a white paper to explain the results I found regarding military pension expenses so that hopefully they weren't ignored, which they still were. But there are trillions upon trillions upon trillions of potential savings available inside this research. And your local National Guard is extremely cost-effective compared to active duty because of the differences in how pensions are structured and earned under those different components. But no one is discussing those potential military savings because most military pension costs were moved out of DoD budgets starting in 1984 and reclassified as Treasury interest expense through a process called liquidating unfunded obligations, which is also a made-up transaction, but more on that later. The next 5 videos released were the estate tax series. Part 1 introduced estate taxes. Part 2 covered the history of estate taxes. Part 3 reviewed the assets reported in every estate tax return filed in 2016. Part 4 reviewed every estate tax deduction and credit claimed in those tax returns. And Part 5 recommended a new way to structure our estate tax code, where the amounts that could be passed tax-free in an estate to heirs is based on a multiple of the American median salary, not an arbitrary number made up by politicians. Because in 2020, married couples could pass $24,150,000 to heirs free of federal estate taxes or 350 years of median income, which is about 330 years more than our historical average, and one of the many reasons our national debt is exploding. I released a $3.6 trillion idea to pay for unfunded veterans' benefits in June of 2021, where I examined a recommendation from the 13th Quadrennial Review of Military Compensation that could save $3.6 trillion in military cost, which could then be allocated to cover more than half of the $6.6 trillion in unfunded veteran benefits payable as of September 30th, 2020. And 3 short years later, that unfunded liability is now over $11 trillion. Unfunded benefits payable are liabilities that we have accrued, meaning we owe them in the future, but these obligations aren't included in national debt subject to the debt limit yet. Think of it as benefits payable without a trust fund full of myself IOUs to account for it yet. Optimize the Military Retirement Fund was released in September of 2021, which revisits the practice of using myself IOUs in the Military Retirement Fund, which pays for service members' pension benefits. 2 years prior to releasing this video, I submitted a proposal to the Air Force Spark Tank program that suggested investing some of the Military Retirement Fund $1 trillion balance in non-fiat or real assets, which didn't happen, and was disheartening because it would have reduced national debt by $719 billion in just 23 months. Fixing the debt ceiling was presented in October of 2021 and combined the idea of buying real assets in the Social Security and Military Retirement Fund presented in these 2 videos, to show how doing so could buy $1 to $3 trillion of relief from the debt limit, which was threatening to shut down the US government at the time. I was hoping a politician would pick up on this idea as an easy solution to address the self-manufactured debt limit crisis. No politician did, which was becoming a common theme. The next 2 videos released were What the Hell is the Tax Gaps Parts 1 and 2 in February of 2022. In Part 1, I reviewed the $600 billion estimated tax gap from 2019, which is the amount of taxes that are illegally not being paid to the government. Now at this point, I had been working on the National Debt Project for over 2 years, and I didn't even know these reports going back to 2001 existed, which was a damn shame because this is an obvious fix to the national debt issue, and one that isn't really being addressed by Congress, based on the last 20 years of tax code changes. I was surprised to find that average American workers were paying 99% of their taxes, but our biggest tax evaders were only paying 45% of their share of taxes, and that we know who they are. In Part 2, I wanted to see how much all those illegally not paid taxes were contributing to our national debt, and it was over $10 trillion, or approximately 1/3 of our outstanding national debt at the time, and most of that tax fraud and associated national debt was attributable to our wealthiest citizens. In fact, the amount of national debt caused from tax evasion from the top 1% of income earners is more than the amount of national debt caused by the bottom 80% combined. Russian sanctions, Are They Working? Was released on March 1st, 2022, 5 days after Russia invaded Ukraine. When I was working on the military spending component of this project, I thought about how future wars would be fought, and how hard it would be to attack a major nation now that globalization has intertwined all of our supply lines, which was obvious during the global shutdown caused by COVID, and how hard it would be to maintain global support for a major conflict now that everyone has a cell phone and can upload footage of the brutality of war to the internet. During that thought exercise, I came to the conclusion that one probable tactic that would be used by developed nations is to short the stock markets of less developed nations in an attempt to apply indirect pressure to their government leaders, which is what happened to Russia until it halted foreigners from being able to trade Russian companies on the Moscow exchange. In June of 2022, I released Modern Monetary Theory Part 1, The Flaw. I had been introduced to Modern Monetary Theory, or MMT, a year prior, after a few internet trolls kept stating I was wasting my time on the National Debt Project because MMT solves all of our financial problems, which I knew not to be true based on my research of intergovernmental transfers and myself IOUs, which is either an intergenerational sleight of hand, where one generation passes a financial burden to a future one, or a compounding interest time bomb that has to be diffused at some point. The concept that our government could create as much money as it needed seemed valid, but the idea that we have politicians who could reasonably control that authority did not. So I started working on a new tax system to address that flaw. Why We Need a Unified Federal Tax System, Parts 1, 2, and 3, were released in October and November of 2022. In Part 1, I showed how our federal income tax system is supposed to work. by reviewing the income and tax deductions claimed on 157 million tax returns from 2019. In Part 2, I showed the effective tax rates actually being paid by Americans after taking into account deductions and lower preference tax rates on income items like capital gains are taken into consideration, and how the results indicate that there is a 99.99% chance that you don't matter in DC. And in Part 3, I threw out the entire old tax system and replaced it with a simplified, unified federal flat tax system, which leans more heavily on a common standard deduction for everyone to generate a progressive tax system, and less on special itemized tax deductions passed by politicians. Doing so implemented the tax loophole cap recommended in balancing the budget by eliminating tax loopholes, while addressing the political hypocrisy discovered in the estate tax series, where politicians state that we can't afford anything, only to pass more special tax deductions and credits when they retake control of Congress, which address the political flaw of MMT reviewed in Part 1. Social Security is an entitlement program structured like a Ponzi scheme, and How to Fix It was released in December of 2022. It reviews the life of Ida Mae Fuller, the first American to receive Social Security benefits, through an overlapping generations model, and explains how she was only required to pay $24.75 into Social Security, but was able to take out $22,888 in benefits. I made the title provocative to get people to watch it to challenge me or become educated on how to address the program's solvency issues, which I show at the end by fixing our tax code and the trust fund's investment strategy, which were ideas presented and reviewed in these videos. Reckless Spending was the second video released in December of 2022, where I reviewed the rate at which our national debt grew between 2014 and 2021, and called out politicians that only seemed to be concerned with national debt when it was politically convenient for them. There are three things that we are recklessly spending on, which is an inefficient tax code, a blind eye to fraud, and time. We are recklessly spending time, which could be stopped by putting aside political agendas and placing the American people above political donors. Modern Monetary Theory Part 2, A Government We Do Not Have, was the third video released in December of 2022. It acknowledges that my stance on MMT from Part 1 was too harsh, now that I'd figured out a tax system that eliminates the need for a cohesive government that is able to put aside political agendas to address inflationary periods without pointing fingers of blame at each other for political gain, a government we do not have. The Tax Evader Protection Act video was released in January of 2023 and is a review of the Family and Small Business Taxpayer Protection Act, which called for the defunding of the IRS even though we're at historically high levels of tax fraud. And as a reminder, the top 1.5 million income earners are defrauding the US government out of more tax revenue than the bottom 126 million combined. And they also just happen to have the most discretionary funds to donate to political campaigns. 12 days later, I released the top 10 ideas to fix our tax code, the third video of the Tax Gap series, How to Close It and Reduce Tax Fraud, which were: number 10, modernize the IRS's tax software; number 9, allow the IRS to enforce minimum competency standards; number 8, increase IRS budgets; number 7, simplify our tax code; number 6, increase electronic filings; number 5, require financial institutions to report aggregate account information for large accounts; number 4, provide free IRS tax concierge to our wealthiest citizens; number 3, raffle off pools of tax returns to be audited by private agencies; number 2, treat all sources of income the same by the federal government; and number 1, implement a two-lever unified flat tax system like the one presented in the Unified Flat Tax series. In February 2023, I released the 10 reasons the quote-unquote Fair Tax Act fails us, as a response to another horrible piece of tax legislation that wanted to amend the Constitution, impose a temporary sales tax that would absolutely rise in the future, but only on individuals so a family would be at a disadvantage to a business when trying to buy a house, enable our largest tax evaders to illegally not pay even more taxes, cause double taxation for anyone who has ever contributed to a retirement account, along with multiple other reasons why it should not be supported. And then it happened, after I asked myself one random question: what happens to national debt if I put intergovernmental transfers and quantitative easing debt in reverse by paying it back with equally special issued pennies? That's velocity far exceeded the rate at which national debt was compounding. The answer: national debt got weird and disappeared. Think of it as matter hitting antimatter, which I explain in this white paper. When I started this project 3.5 years ago, I set out on a journey to solve our national debt problem, but it was at this moment that my understanding of the problem advanced the most. And since national debt is the result of imbalances between taxes collected and taxes spent, and could be paid down to zero and retired if so desired, the first step to solve the national debt problem is admitting that we don't actually have a national debt problem. We have a political problem. Modern Monetary Theory Part 3 was released in July of 2023 to provide 9 variables to grade government spending regardless of political affiliation. Efforts to grow variables such as real GDP or the middle class and societal utility should be supported, as well as efforts to decrease variables such as the rates of poverty, inequities in our tax code promoting wealth inequality, and rates of inflation. After 4 years of research, I released Modern Monetary Theory Part 4, The Fix, to finally show how to address our national debt issue, where I explain how we got where we are by not updating legacy fiscal policies after a major change in our monetary policy, resulting in an inequitable tax code that is fueling trust funds full of national debt, and how that is really a political problem that can be solved with a unified federal tax system and sovereign wealth funds that grow assets, not national debt. After 4 years of working on this project, I couldn't just put it aside, so I released Scrap the Cap on Social Security in October of 2023, which explores the idea of removing the cap on the amount of income Americans pay Social Security taxes on to avoid the automatic cuts that will go into effect as the baby boomer generation continues to claim benefits and draws the Social Security Trust Fund down. And I released National Debt Interest versus National Debt Spending in November of 2023 to call out the ignorance or hypocrisy of politicians pretending to be caught off guard by the magnitude of how large our national debt interest expense has grown, even though every report since 2009 stated that exact outcome would occur without policy changes. And while independently important, those videos didn't meaningfully contribute to the National Debt Project because I had already solved the issue with these 11 works. So I would encourage you to watch at least these videos to become more informed about the national debt issue, because I spent thousands and thousands of hours on this project so that you could become informed in minutes. I'm Stephen Paluga with WatchGuard Capital. Invest your time wisely.